Welcome to Birdsy's 80-Term Real Estate Vocabulary Challenge. In this video, we'll help you master key terms crucial for passing your real estate exam. From legal and finance terms to property and contract lingo, we've got you covered. Ready to get started? Let's dive in.
Real estate vocabulary exam. Legal terms. Easement. What is an easement in the context of real estate? Is it A, an agreement between two neighbors regarding boundary fences? B, a legal right to use another person's land for a specific limited purpose? C, a form of lease or rental agreement for a portion of land? Or D, the process of merging two parcels of land into one? The answer is B, a legal right to use another person's land for a specific limited purpose. An easement is a legal right that allows the holder to use the property of another for a specific purpose, such as a utility line or access road. It does not grant ownership, only usage rights. Encumbrance. What is an encumbrance in real estate? Is it A, a restriction on the use or transfer of property? B, an increase in property value due to market conditions? C, a government-imposed tax on property? Or D, a type of mortgage that is non-recourse? The answer is A, a restriction on the use or transfer of property. An encumbrance in real estate is any right or interest in land that restricts the owner's full control. Encumbrances can take many forms, like liens, easements, and restrictive covenants, affecting the value and use of the property. Lien. What is a lien in the context of real estate? Is it A, an agreement to lease property? B, a servitude on a property? C, a right to keep possession of property belonging to another person until a debt owed by that person is discharged? Or D, a legal document recording the sale of property? The answer is C, a right to keep possession of property belonging to another person until a debt owed by that person is discharged. A lien is a legal claim against property that typically secures payment of a debt. It ensures the debtor must repay or face possible foreclosure or other legal action. Deed. What is a deed in real estate? Is it A, a document used to transfer ownership of real property? B, a contract for renting a property? C, an agreement for financing a property purchase? Or D, a certificate issued by the government for property taxes? The answer is A, a document used to transfer ownership of real property. A deed is a legal document that transfers ownership of real estate from one person or entity to another. It must be signed, sealed, and delivered to be legally binding. Title. Which term refers to the official rights of use, possession, and ownership of property in real estate? Is it A, easement? B, deed? C, title? Or D, lien? The answer is C, title. Title signifies the legal rights of ownership, use, and possession of property in real estate. It establishes who officially owns a piece of property. Adverse possession. Which of the following best describes the concept of adverse possession in real estate law? Is it A, a legal doctrine allowing the government to take private property for public use? B, a legal principle that allows a person to claim ownership of land under certain conditions? C, a method through which a property's value is assessed for tax purposes? Or D, a contractual agreement between a tenant and a landlord regarding property use? The answer is B, a legal principle that allows a person to claim ownership of land under certain conditions. Adverse possession allows a person to claim ownership of land by occupying it in a way that contradicts the true owner's rights for a statutory period set by law. Foreclosure. Which of the following defines the term foreclosure in real estate? Is it A, the sale of a property at a value lower than its market price? B, the process by which a lender takes back ownership of a property due to the borrower's failure to make mortgage payments. C. The acquisition of land to expand urban development. Or D. The temporary suspension of loan repayments due to financial hardship. The answer is B. The process by which a lender takes back ownership of a property due to the borrower's failure to make mortgage payments. Foreclosure is a legal process where a lender takes ownership of a property due to the borrower's missed mortgage payments. The property is then sold to recover the owed balance. Restrictive covenant. What is a restrictive covenant in real estate? Is it A, a rule that obligates a property owner to maintain their property in a certain way? B, a legal obligation imposed in a deed to do or not do something with the property? C, a zoning law that determines how land in certain areas can be used? Or D, a guideline suggested by a homeowners association for property appearance? The answer is B, a legal obligation imposed in a deed to do or not do something with the property. Restrictive covenants are clauses in property deeds that restrict the owner's use of the land. These legally enforceable limitations ensure certain behaviors or standards are maintained within the property. Eminent domain. What is eminent domain? Is it A, the right of a government to take private property for public use? B, the process of a lender seizing a borrower's property due to non-payment of a mortgage? C, legal rights granted to use another's land for a specific purpose? Or D, a statutory right allowing temporary occupation of land for military purposes? The answer is A, the right of a government to take private property for public use. Eminent domain permits government entities to compulsorily purchase private property for public utility, given the property owner is fairly compensated. Zoning ordinance. What is the primary purpose of a zoning ordinance? Is it A, to control the types of businesses in a neighborhood? B, to regulate property taxes? C, to determine the permissible use of land and buildings? Or D, to establish property boundaries? The answer is C, to determine the permissible use of land and buildings. Zoning ordinances are legal tools used by municipalities to control land use, ensuring orderly development and separation of different types of uses for health, safety, and general welfare.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Finance terms. Mortgage. What is a balloon mortgage? Is it A, a mortgage with a large payment at the end of the loan term? B, a mortgage that requires no down payment? C, a mortgage with variable interest rates? Or D, a mortgage that can be converted to a fixed-rate loan? The answer is A, a mortgage with a large payment at the end of the loan term. A balloon mortgage involves smaller regular payments with a remaining balance due at the end of the loan term. This final installment is significantly larger, hence the term balloon. Amortization. What is amortization in real estate finance? Is it A, the process of paying off a debt with a fixed repayment schedule in regular installments over a period of time? B, a one-time lump sum payment to pay off a debt in full? C, the increase in property value over time? Or D, the assessment of a property's value by a professional appraiser? The answer is A, the process of paying off a debt with a fixed repayment schedule in regular installments over a period of time. Amortization refers to the process of gradually repaying a loan through scheduled periodic payments that include both principal and interest. Over time, this reduces the balance until it reaches zero. Equity. In real estate finance terms, what does equity represent? Is it A, the market value of the property, B, the owner's interest in the property after subtracting liabilities, C, the amount paid as down payment, or D, the total amount of mortgage owed? The answer is B, the owner's interest in the property after subtracting liabilities. In real estate, equity is the difference between the market value of a property and the amount of any loans or liens against it. Higher equity often indicates greater financial stability. Interest rate. What does the term fixed interest rate mean in the context of a mortgage? Is it A, the interest rate changes based on market conditions, B, the interest rate remains the same for the entire term of the loan, C, the interest rate is lower at the beginning but increases over time, or D, the interest rate is subject to annual reviews? The answer is B, the interest rate remains the same for the entire term of the loan. A fixed interest rate on a mortgage does not change over the term of the loan. This provides stability for budgeting and long-term financial planning. Escrow. What is the primary purpose of an escrow account in a real estate transaction? Is it A, to hold the seller's profits until closing, B, to manage the closing process and ensure all conditions are met before funds are released, C, to secure the buyer's down payment until loan approval, or D, to calculate the property's fair market value? The answer is B, to manage the closing process and ensure all conditions are met before funds are released. An escrow account in real estate transactions manages the buyer's and seller's funds, ensuring conditions of the sale are met before dispersing funds. It helps provide trust and security for both parties. Balloon payment. What is a balloon payment in the context of real estate financing? Is it A, a payment made at the beginning of a loan that reduces the principal amount, B, a large lump sum payment due at the end of a loan term, C, a series of smaller payments that gradually reduce the loan balance over time, or D, a penalty fee for early repayment of a loan? The answer is B, a large lump sum payment due at the end of a loan term. A balloon payment reduces monthly payments during the loan term but requires a large lump sum at the end. This type of payment is common in certain types of real estate financing. Adjustable rate mortgage. What is an adjustable rate mortgage? Is it A, a fixed rate mortgage with consistent interest rates, B, a mortgage with an interest rate that changes periodically, C, a loan that requires no down payment, or D, a mortgage providing a balloon payment at the end? The answer is B, a mortgage with an interest rate that changes periodically. An adjustable rate mortgage, ARM, is a type of mortgage in which the interest rate applied on the outstanding balance varies throughout the life of the loan. It usually follows a fixed index or benchmark. Fixed rate mortgage. What is a fixed rate mortgage? Is it A, a mortgage where the interest rate remains the same throughout the term of the loan, B, a mortgage where the interest rate changes periodically based on a benchmark interest rate or index, C, a mortgage that can be paid off early without any prepayment penalty, or D, a mortgage with a rate that changes based on the borrower's credit score? The answer is A, a mortgage where the interest rate remains the same throughout the term of the loan. A fixed-rate mortgage maintains the same interest rate for its entire term, providing stability and predictability in monthly payments. Private mortgage insurance, PMI. What is private mortgage insurance, MI, and when is it usually required? Is it A, an insurance that protects the lender in case of a borrower's default, required when the down payment is less than 20%? B, an insurance that protects the homeowner in case of property damage, required at the time of closing? C. A government-issued insurance that helps low-income families secure housing loans. Or D. An additional insurance that is purchased to cover investment properties' income losses. The answer is A. An insurance that protects the lender in case of a borrower's default, required when the down payment is less than 20%. Private mortgage insurance, PMI, is commonly required for conventional loans where the down payment is less than 20%. It provides protection for the lender if the borrower defaults on the loan. Points. What are points in real estate financing? Is it A. A type of property tax? B. Interest paid by the borrower? C. Fees paid to real estate agents? Or D. Fees paid directly to the lender at closing in exchange for a reduced interest rate? The answer is D. Fees paid directly to the lender at closing in exchange for a reduced interest rate. Points, also called discount points, are fees paid directly to the lender at closing in exchange for a reduced interest rate. They are essentially prepaid interest on the mortgage.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Property terms. Appraisal. What is the primary purpose of an appraisal in real estate? Is it A. To calculate tax liabilities? B. To determine the market value of a property? C. To negotiate rental agreements? Or D. To set municipal zoning regulations? The answer is B. To determine the market value of a property. Appraisals provide an unbiased estimate of a property's market value, which is crucial for transactions, financing, and investment decisions. Depreciation. What type of depreciation occurs due to changes in the external environment, such as economic or neighborhood shifts? Is it A. Physical depreciation? B. Functional obsolescence? C. Economic obsolescence? Or D. Deferred maintenance? The answer is C. Economic obsolescence. Economic obsolescence reduces property value due to external factors, making it crucial for real estate professionals to assess neighborhood trends and economic shifts when evaluating properties. Zoning. What is zoning in the context of real estate? Is it A. The process of determining the ownership of land? B. The division of land into areas for specific uses such as residential, commercial, or industrial? C. The process of valuing a property for tax purposes? Or D. The method used to measure a building's environmental impact? The answer is B. The division of land into areas for specific uses such as residential, commercial, or industrial. Zoning is a planning tool used by municipalities to regulate land use and development. It ensures harmonious development by assigning land into zones based on usage, like residential, commercial, or industrial. Subdivision. What is a cul-de-sac in the context of a residential subdivision? Is it A. A dead-end street, typically closed at one end with a circular turnaround? B. A street with multiple exit points leading to main roads? C. A commercial area with shops within a residential neighborhood? Or D. A common area in a subdivision for community gatherings? The answer is A. A dead-end street, typically closed at one end with a circular turnaround. A cul-de-sac is a dead-end street with a turnaround area at one end, designed to enhance safety and reduce through traffic in residential subdivisions. Fixtures. Which of the following is considered a fixture in real estate terminology? Is it A. A detached table? B. A built-in bookshelf? C. A freestanding lamp? Or D. A removable rug? The answer is B. A built-in bookshelf. In real estate, a fixture is any physical property that is permanently attached to the land, such as built-in furniture or lighting fixtures. Identifying fixtures versus personal property is essential in real estate transactions. Real property. What is real property? Is it A, property that can be moved, like furniture? B, immovable property such as land and buildings? C, personal belongings of the homeowner? Or D, assets that are easily liquidated? The answer is B, immovable property such as land and buildings. Real property encompasses land and immovable objects attached to it, such as houses and buildings, distinguished from personal property, which includes movable items. Personal property. What is personal property in real estate terms? Is it A, a piece of land with natural resources? B, movable items owned by an individual? C, permanent fixtures attached to the land? Or D, a leasehold interest in real estate? The answer is B, movable items owned by an individual. Personal property refers to movable items that are not permanently affixed to land or buildings. This includes belongings such as furniture, vehicles, and other tangible items that can be easily relocated. Intangible property. Which of the following best describes intangible property in real estate? Is it A, physical assets like a building or land? B, rights and privileges such as easements or patents? C, fixtures and fittings within a building? Or D, the market value of a building? The answer is B, rights and privileges such as easements or patents. Intangible property in real estate pertains to non-physical assets such as intellectual property rights, easements, and licenses. These assets are not physical items, but bring value to the property. Tangible property. What is the definition of tangible property in real estate? Is it A, property that can be touched and physically measured? B, legal rights or interests attached to the ownership of property? C, property that includes stocks and bonds? Or D, property that is leased on a long-term basis? The answer is A, property that can be touched and physically measured. Tangible property in real estate refers to physical assets such as buildings, land, and equipment that can be touched, seen, and measured. Market value. What is the definition of market value in real estate? Is it A, the price at which a property is listed by the seller? B, the amount an appraiser determines a property is worth? C, the price at which a property would sell under normal conditions? Or D, the price a buyer is willing to pay at a given moment? The answer is C, the price at which a property would sell under normal conditions. Market value is the price at which a property is likely to sell under normal conditions in a competitive and open real estate market.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Contract terms. Offer. What is an earnest money deposit in a real estate offer? Is it A, a small token sum given to the seller to show genuine interest? B, a large sum paid by the buyer as advance payment for the property? C, a deposit made by a buyer to demonstrate serious intent to purchase a property? Or D, a sum paid by the seller to keep the property off the market? The answer is C, a deposit made by a buyer to demonstrate serious intent to purchase a property. An earnest money deposit is a sum paid by the buyer to show serious intent to purchase. It gives the seller confidence and is usually held in escrow until the purchase is finalized. Acceptance. Which term refers to a mutual agreement between two parties to enter into a contract? Is it A, consideration, B, offer, C, acceptance, or D, breach? The answer is C, acceptance. Acceptance in a real estate context means that a party agrees to the terms offered in a contract, forming a binding agreement. It is crucial for the enforcement of real estate contracts. Consideration. In a real estate contract, what does consideration generally refer to? Is it A, the location of the property, B, the mutual agreement between parties, C, the value exchange between parties, or D, the terms and conditions of the contract? The answer is C, the value exchanged between parties. In real estate and contract law, consideration denotes the value, which could be money, services, etc., that is exchanged between the contracting parties as part of the agreement. Contingency. What does a finance contingency in a real estate contract typically mean? Is it A, the sale is contingent upon the buyer securing financing, B, the seller must find a new home before the sale can proceed, C, the buyer can walk away if the appraisal is lower than the purchase price, or D, the sale is contingent upon the property passing an inspection? The answer is A, the sale is contingent upon the buyer securing financing. A finance contingency allows a buyer to withdraw from the sale if they cannot secure mortgage financing, protecting them from financial hardship or contract breaches. Closing. What is the closing in a real estate transaction? Is it A, the final step in the home buying process when ownership of the property is transferred to the buyer, B, the process of negotiating the final terms and price of a real estate transaction, C, an inspection to ensure that the property is in the agreed-upon condition before the sale is finalized, or D, the initial meeting between a real estate agent and a potential buyer to discuss property options? The answer is A, the final step in the home buying process when ownership of the property is transferred to the buyer. Closing is the final step in a real estate transaction where the buyer legally takes ownership of the property and all contractual obligations are fulfilled. Earnest money. What is the primary purpose of earnest money in a real estate transaction? Is it A, to cover the cost of closing fees, B, to demonstrate the buyer's serious intent, C, to guarantee the property will be sold, or D, to pay the real estate agent's commission? The answer is B, to demonstrate the buyer's serious intent. Earnest money is a deposit made to demonstrate a buyer's genuine commitment to purchasing a property. It is typically held in escrow until closing and is credited towards the purchase price. Breach of contract. What is the consequence of a material breach of contract in real estate? Is it A, the contract becomes voidable at the discretion of the non-breaching party, B, the breaching party is automatically required to pay double the damages, C, the non-breaching party must continue to fulfill their obligations under the contract, or D, the contract remains in effect, but with reduced obligations for the breaching party? The answer is A, the contract becomes voidable at the discretion of the non-breaching party. A material breach of contract in real estate allows the non-breaching party to terminate the contract and seek legal remedies, thus voiding the agreement if they choose to do so. Specific performance. What does the term specific performance mean in a real estate contract? Is it A, a financial penalty paid by the defaulting party, B, the transfer of ownership of the property as stipulated in the contract, C, the cancellation of the contract by mutual agreement, or D, a requirement to pay attorney's fees and court costs? The answer is B, the transfer of ownership of the property as stipulated in the contract. Specific performance is a legal remedy in real estate contracts requiring the defaulting party to fulfill contractual terms, often mandating the property transfer as originally agreed. Bilateral contract. What is a bilateral contract in the context of real estate? Is it A, an agreement in which both parties promise to perform a specific act, B, a contract in which only one party makes a promise, C, an agreement that is binding only after one party has performed its duty. Or D, a non-binding agreement typically used for initial negotiations. The answer is A, an agreement in which both parties promise to perform a specific act. A bilateral contract in real estate obliges both parties to fulfill set terms, making the agreement enforceable from the outset. Unilateral contract. What is a unilateral contract? Is it A, a contract that is legally binding only to one party? B, a contract that involves two parties with mutual obligations? C, a contract that does not involve performance from either party? Or D, a non-negotiable contract imposed by one party? The answer is A, a contract that is legally binding only to one party. In a unilateral contract, only one party makes a promise in exchange for a specific act. The contract is fulfilled once the action is performed by the other party. Terms. Agent. What is the primary duty of a real estate agent under a fiduciary relationship? Is it A, marketing the property? B, ensuring the lowest possible price for the buyer? C, acting in the best interest of the client? Or D, managing the agent's commission? The answer is C, acting in the best interest of the client. In a fiduciary relationship, the agent is legally obligated to act in the client's best interests at all times, ensuring loyalty and full disclosure. Broker. In real estate, what is the primary role of a broker? Is it A, to oversee property construction projects? B, to provide legal advice on real estate transactions? C, to facilitate the buying and selling of properties? Or D, to appraise the value of properties? The answer is C, to facilitate the buying and selling of properties. A broker's principal function is to act as an intermediary between buyers and sellers in real estate transactions. They negotiate terms, arrange the sale, purchase, or rental of properties, and manage documentation. Principal. What does the term principal refer to in real estate agency terminology? Is it A, the person who provides the capital for a real estate transaction? B, an individual who appoints an agent to act on their behalf? C, a business entity that owns multiple real estate properties? Or D, the main tenant of a rental property? The answer is B, an individual who appoints an agent to act on their behalf. In real estate, the principal is the person who hires and delegates authority to an agent to act on their behalf in business transactions or legal matters. Dual agency. What does dual agency refer to in real estate transactions? Is it A, one real estate agent representing both the buyer and the seller? B, two real estate agents from the same brokerage representing the buyer and the seller? C, two real estate agents from different brokerages representing a buyer and a seller? Or D, an agent switching representation between the buyer and the seller during negotiation? The answer is A, one real estate agent representing both the buyer and the seller. Dual agency occurs when one real estate agent or brokerage represents both the buyer and the seller in a transaction. This situation can lead to conflicts of interest and is heavily regulated. Fiduciary. What does the term fiduciary duty refer to in a real estate agency relationship? Is it A, the legal obligation of confidentiality between the client and the agent? B, the financial responsibility of the agent towards the client's investments? C, the complete loyalty and trust the agent must provide to the client? Or D, the duty to ensure all real estate laws are followed? The answer is C, the complete loyalty and trust the agent must provide to the client. Fiduciary duty in real estate mandates that an agent must act in the best interests of their client, ensuring loyalty, care, confidentiality, and full disclosure, amongst other responsibilities. Listing agreement. What does the term exclusive right to sell mean in a listing agreement? Is it A, the agent has the exclusive right to buy the property? B, the agent earns a commission only if they find the buyer? C, the agent is the only one authorized to sell the property and earns a commission no matter who sells it? Or D, the property can be sold by multiple agents? The answer is C. The agent is the only one authorized to sell the property and earns a commission no matter who sells it. An exclusive right to sell listing agreement gives the listing agent the sole right to sell the property and earn a commission regardless of who actually sells it. This ensures the agent's incentive to market the property effectively. Buyer's agent. What is the primary responsibility of a buyer's agent in a real estate transaction? Is it A, to represent the interests of the buyer and ensure that they get the best possible deal? B, to represent the interests of the seller and facilitate the sale of the property? C, to act as a neutral party, ensuring that both buyer and seller get a fair deal? Or D, to manage the financial transactions between the buyer and the seller? The answer is A, to represent the interests of the buyer and ensure that they get the best possible deal. A buyer's agent represents the buyer's interests in a real estate transaction, working to secure the best terms and price for the purchaser. Seller's agent. What is the main responsibility of a seller's agent? Is it A, to provide financing options to the buyer? B, to market the property and find qualified buyers? C, to conduct home inspections? Or D, to negotiate mortgage terms with the lender? The answer is B, to market the property and find qualified buyers. A seller's agent is tasked with representing the seller's interests, including marketing the property and finding and qualifying potential buyers to facilitate a successful sale. Designated agency. What is a designated agency in real estate? Is it A, when one real estate agent represents both the buyer and the seller? B, when the broker appoints two separate agents to represent the buyer and the seller in the same transaction? C, when a real estate broker represents only one party in the transaction? Or D, when a buyer's agent is also the listing agent? The answer is B, when the broker appoints two separate agents to represent the buyer and the seller in the same transaction. In a designated agency, the real estate broker appoints separate agents to represent the buyer and the seller, ensuring each party has dedicated and unbiased representation. Transactional broker. What is the primary role of a transactional broker in a real estate transaction? Is it A, to represent either the buyer or the seller exclusively? B, to manage the client's financial transactions for the purchase? C, to assist both parties without providing any fiduciary duties? Or D, to ensure the legality of the transaction and offer legal advice? The answer is C, to assist both parties without providing any fiduciary duties. A transactional broker facilitates real estate transactions by assisting both parties without providing fiduciary duties, but ensuring compliance with applicable laws.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Valuation and market analysis. Comparative market analysis, CMA. What is a comparative market analysis primarily used for in real estate? Is it A, to determine the property's listing price? B, to inspect the property's structural integrity? C, to assess the property's tax value? Or D, to determine loan approval for the buyer? The answer is A, to determine the property's listing price. A CMA provides a comparative look at similar properties to help determine a competitive listing price. It considers various factors such as location, size, and condition of the property. Appraisal methods. Which appraisal method uses the principle of substitution to value a property by considering the cost of constructing a similar building? Is it A, sales comparison approach, B, income capitalization approach, C, cost approach, or D, gross rent multiplier? The answer is C, cost approach. The cost approach determines the value of a property by calculating the cost of building a similar structure using current prices for materials and labor, adjusted for depreciation, plus the land value. It utilizes the principle of substitution. Sales comparison approach. How does the sales comparison approach primarily determine the value of a property? Is it A, by analyzing the property's potential income, B, by comparing the subject property to recent sales of similar properties, C, by calculating the cost to build a similar property, or D, by considering the property's historical appreciation rates? The answer is B, by comparing the subject property to recent sales of similar properties. The sales comparison approach estimates property value based on the prices of recently sold comparable properties. It is most useful in active real estate markets with sufficient comparable sales data. Cost approach. What is the main purpose of the cost approach in real estate valuation? Is it A, to estimate the income potential of a property, B, to determine the replacement or reproduction cost of a property, C, to assess the current market value based on comparable sales, or D, to evaluate the future appreciation of a property? The answer is B, to determine the replacement or reproduction cost of a property. The cost approach in real estate valuation is used to estimate the replacement or reproduction cost of a property, factoring in depreciation and land value. Income approach. Which component is critical in calculating the capitalization rate using the income approach? Is it A, gross income multiplier, B, net operating income, C, land residual technique, or D, expense ratio? The answer is B, net operating income. The capitalization rate is calculated by dividing the net operating income, NOI, by the current market value or sale price of the property. This ratio helps in evaluating the return on investment. Gross rent multiplier. What is the gross rent multiplier used to determine? Is it A, the frequency of rent payment, B, the value of a rental property based on its rental income, C, the period of a lease agreement, or D, the appreciation rate of a rental property? The answer is B, the value of a rental property based on its rental income. The gross rent multiplier, GRM, is a valuation tool used by real estate investors to assess the value of a rental property based on its rental income. It is calculated by dividing the property's purchase price by its gross rental income. Market price. What is market price in the context of real estate? Is it A, the price a seller advertises a property for, B, the price agreed upon by a willing buyer and seller in an open market, C, the price set by a governmental appraisal, or D, an average price of similar properties in the area? The answer is B, the price agreed upon by a willing buyer and seller in an open market. Market price is the price a buyer and seller agree upon in an open and competitive market. It reflects the actual transaction and can differ from listing or appraised values. Supply and demand. What is the principle of supply and demand in real estate? Is it A, it states that the price of real estate decreases as the demand increases, B, it states that the price of real estate is determined by the availability of properties and the need for them, C, it focuses on the governmental regulations affecting real estate prices, or D, it suggests that an increase in supply always leads to increased prices? The answer is B. It states that the price of real estate is determined by the availability of properties and the need for them. Supply and demand in real estate indicates that prices are influenced by the number of available properties and the buyer's need for those properties. A balanced market leads to stable prices. Highest and best use. What does the term highest and best use refer to in a real estate valuation context? Is it A, the use that will have the lowest environmental impact? B, the most profitable use of a property within the physical and legal constraints? C, the use that complies entirely with zoning regulations, regardless of profitability? Or D, the use that maximizes sustainability and energy efficiency? The answer is B, the most profitable use of a property within the physical and legal constraints. Highest and best use is determined by evaluating the legally permissible, physically possible, and financially feasible options to identify the most profitable use of a property. Investment value. What does the term investment value signify in real estate valuation? Is it A, market value of the property? B, value of a property to a particular investor based on individual investment criteria? C, insurable value of the property? Or D, assessed value by tax authorities? The answer is B, value of a property to a particular investor based on individual investment criteria. Investment value reflects the worth of a property to a specific investor, considering individual investment criteria, goals, and financing. It often differs from market value, which is more general and broader. Property management. Lease. What is a gross lease in property management? Is it A, a lease in which the tenant pays a fixed rent and the landlord covers all property expenses? B, a lease where the tenant is responsible only for property taxes? C, a lease where the tenant pays rent based on a percentage of their business revenue? Or D, a lease where utilities are split between tenant and landlord? The answer is A, a lease in which the tenant pays a fixed rent and the landlord covers all property expenses. A gross lease means the tenant pays a fixed rent while the landlord covers all property expenses, simplifying tenant budgeting. Landlord. What is the term used to describe a lease agreement that includes property maintenance by the landlord? Is it A, net lease? B, gross lease? C, percentage lease? Or D, triple net lease? The answer is B, gross lease. In a gross lease, the landlord is responsible for covering property maintenance expenses, allowing the tenant to pay a fixed rental fee. This simplifies budgeting for the tenant. Tenant. What term describes a violation by the tenant of the terms agreed upon in a lease contract? Is it A, default? B, eviction? C, or D, leasehold? The answer is A, default. A default is when the tenant does not meet their obligations under the lease agreement, such as paying rent or maintaining the property as agreed. Eviction. What is the primary reason a property manager might file for eviction? Is it A, the tenant has damaged the property? B, the tenant has requested a maintenance repair? C, the tenant hosted a party without informing the landlord? Or D, the tenant has communicated with the landlord? The answer is A, the tenant has damaged the property. Eviction occurs when a tenant violates lease terms significantly, such as causing property damage or failing to pay rent, which justifies legal action to remove them from the property. Security deposit. Which of the following is generally true about the collection and use of a security deposit by a landlord? Is it A, a security deposit is always refundable under any circumstances? B, a security deposit can be used to cover unpaid rent? C, a landlord can charge any amount they like for a security deposit? Or D, the security deposit must always be returned to the tenant within 1 week of lease termination. The answer is B. A security deposit can be used to cover unpaid rent. Security deposits are collected to protect landlords against unpaid rent or damages. They must follow local regulations, often being refundable. Some rules limit the amount and time frame for returning the deposit. Rent control. What is the main purpose of rent control laws? Is it A, to increase rental property values, B, to protect tenants from excessive rent increases, C, to regulate the construction of new rental properties, or D, to standardize lease agreements across all properties? The answer is B, to protect tenants from excessive rent increases. Rent control laws are enacted to prevent rent gouging and provide stability to tenants by limiting how much landlords can increase rent. This aims to create more affordable housing options. Property maintenance. What is the primary responsibility of a property manager in terms of property maintenance? Is it A, collecting rents from tenants, B, ensuring the property is well maintained and safe, C, marketing the property to potential tenants, or D, negotiating lease agreements? The answer is B, ensuring the property is well maintained and safe. A property manager must maintain the property to ensure safety and comfort for tenants, which includes regular inspections and timely repairs. Lease agreement. What is a triple net lease? Is it A, a lease where the tenant pays for their own utilities only, B, a lease where the tenant is responsible for property taxes, insurance, and maintenance, C, a lease where the tenant pays a fixed monthly rent including all utilities, or D, a lease where the length of tenancy is lower than 1 year? The answer is B, a lease where the tenant is responsible for property taxes, insurance, and maintenance. A triple net lease is a commercial lease where the tenant covers property taxes, insurance, and maintenance, shifting significant financial responsibilities from the landlord. Sublease. What is a sublease in property management? Is it A, a new lease agreement between the landlord and a new tenant, B, an agreement where the tenant rents the property for a shorter term, C, an arrangement where the tenant rents part or all of the property they are leasing to another party, or D, a contract that transfers the responsibilities of the original lease to another tenant entirely? The answer is C, an arrangement where the tenant rents part or all of the property they are leasing to another party. A sublease occurs when a tenant leases part or all of their rented property to a new tenant. The original tenant remains responsible for the lease agreement with the landlord. Property manager. What is the primary responsibility of a property manager? Is it A, ensuring compliance with zoning laws, B, setting rent rates based on market conditions, C, maintaining and managing the property by handling its day-to-day operations, or D, conducting property sales transactions? The answer is C, maintaining and managing the property by handling its day-to-day operations. Property managers are responsible for the daily operations of real estate properties, including maintenance, tenant relations, and financial management, ensuring the properties are well maintained and profitable. Real estate math. Proration. What is proration in real estate? Is it A, the division of real estate cost between buyer and seller, B, the increase in property value over time, C, the process of estimating the market value of a property, or D, the calculation of mortgage interest rates for a new loan? The answer is A, the division of real estate costs between buyer and seller. Proration in real estate refers to the process of dividing certain expenses, such as property taxes or HOA fees, between the buyer and the seller based on the proportion of the time each party owns the property. Loan-to-value ratio. What does the acronym LTV stand for in real estate financing? Is it A, loan-to-value, B, lease-to-value, C, loan-to-volume, or D, lease-to-volume? The answer is A, loan-to-value. LTV, or loan-to-value, is a ratio that compares the amount of the loan to the value of the property. It helps lenders assess the risk of the loan. Area calculation. What is the total square footage of a rectangular lot measuring 150 feet in width and 200 feet in length? Is it A, 30,000 square feet, B, 15,000 square feet, C, 3,000 square feet, or D, 50,000 square feet? The answer is A, 30,000 square feet. To calculate the area of a rectangular lot, multiply the width, 150 feet, by the length, 200 feet, to get 30,000 square feet. Volume calculation. Which term describes the amount of space within a three-dimensional boundary in real estate? Is it A, area, B, volume, C, perimeter, or D, height? The answer is B, volume. Volume in real estate is the measure of how much space is within a three-dimensional boundary, such as a room or a building. Capitalization rate. What does the capitalization rate, cap rate, measure in real estate investment? Is it A, the rate at which the property value appreciates over time, B, the rate of return on a real estate investment based on the income it is expected to generate, C, the interest rate charged on a mortgage for the property, or D, the total operating costs and expenses associated with the property? The answer is B, the rate of return on a real estate investment based on the income it is expected to generate. The capitalization rate, cap rate, measures the rate of return on a real estate investment based on its annual income compared to its current value. This helps investors assess potential profitability. Depreciation calculation. How do you calculate the annual depreciation of a real estate property using the straight-line method? Is it A, divide the property's cost by the number of years in its useful life, B, divide the property's cost by the total square footage, C, multiply the property's cost by the depreciation rate, or D, subtract the salvage value from the property's cost and then divide by the useful life? The answer is A, divide the property's cost by the number of years in its useful life. Straight-line depreciation divides the cost of the property by its useful life to calculate annual depreciation. This method simplifies the calculation by assuming constant yearly depreciation. Gross income multiplier. What is the gross income multiplier formula for calculating the value of an income-producing property? Is it A, value gross GM, B, value equals gross income, C, value equals net AM, or D, gross income? The answer is B, value equals gross income. Gross income multiplier is a ratio used to estimate the value of an income-producing property. It is calculated by dividing the property value by its gross annual income. Net operating income. What is net operating income, NOI, in real estate? Is it A, the total revenue generated by a property, B, the income generated by a property after all operating expenses are deducted but before taxes and financing costs, C, the income generated by a property after all expenses, including taxes and financing costs, are deducted, or D, the value of a property calculated based on future income projections? The answer is B, the income generated by a property after all operating expenses are deducted but before taxes and financing costs. NOI represents the profitability of a real estate investment by showing earnings before tax, deductibles, and interest charges are applied. It is vital for evaluating investment potential.
Great job completing the Real Estate Vocabulary Challenge. For more free content, including in-depth practice exams and tips, subscribe to our channel. And if you'd like to try Birdsy for free, go to birdsy.ai or click the link in the description.